Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, November 15th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You can see right here, this is the the election key range or impulse move that goes up to about right here, and that's the high, and that's 21.52 half. We have 20.28 half down here, basically. And you can see that over the last 4 sessions, we've had price just hold right above that election impulse range. And that's very important because if these bulls up here, the late bulls to the party, because these bulls got paid all the way up, but these late bulls to the party here, if they don't get paid and start to see new highs, the stops below 52 half and especially 44 half, 44.75 will likely come out, and you'll see a move right back to the midpoint of that impulse range, which would be 2090, and the FOMC level, which would be just below it at 2095, or just above it at 2095. So basically, right now we're watching to see how these group of market participants here fare in their trades. Are they going to get paid or not? Because failure to hold 52 and then 44s could open up a big rotation back to 2090 to 2095 very, very quickly. Any pullback into that zone, though, could be a buying opportunity for a rotation back up. Above 2190 would squeeze into our next upside zone of stops, targets rather, and what we were looking for, remember, was 2233, 2240. That's the zone up there that makes the most sense as the next near-term area, in addition to 2280, basically 2278's. Is 2 key range targets, 100% moves. It's this key range from here to here, targets that area, and then you have this key range from the election day, which also points to that area. So ultimately, if we are going to squeeze through 2190 and this thing will be real, we would likely see 2240 and then 2280 as the next 2 upside targets. But right now, we got to see what's going to happen with these participants, especially can 52 half hold. All right, let's drop onto the intraday time frame here. PivotBoss intraday. There we are. What you see right here, basically price holding above the previous session's close, holding above the previous week's close. 2160, very important right now. And it looks like, both sides of the range here have been offered here by responsive participants. I would see it'd be likely a fade the edges type of scenario here. So if price gets above 2170, it could be a short-term fade back down. If price gets down here below 2157, it could be an opportunity to bring it back up, at least on the first test here. So short-term, we're kind of building that out. 2170 has been an area here between 2170 and 2168 where bears have been defending short-term. And again, if bears can continue to keep 2170 offered, the expectation is we could see a big push through 2152 and into the next area of targets below, which again, 2090 to 2095. So this is the major support level to watch intraday. So right now, on first test, bulls will want to defend it, but if that area starts to go offered, it could be a significant gateway to a swing move lower. Okay, let's take a look at crude oil futures. Crude oil has had a tremendous recovery here over the last afternoon plus. Let's take a look at the pivots on a weekly basis here. So here's the weekly pivots. Here's what we were looking for the previous session. We were watching 43s. 43s have been super, super important. We got a perfect bounce before and bounced. We bounced before over here. And so what happened was, I mentioned to our group, 43s is very important here. We want to know, where does price close by the end of the day? Does it close above or below? Because prices were forming a range down below here. It looked like it wanted to go lower. But I mentioned if price breaks back above 43.12 especially, which is the white dotted line, we could be looking at a significant push back toward 45.60 and perhaps even as high as 46.69 to 47.70, 47.25. So we could be looking at much more strength. So this is very important, but right now 43s are still the absorption point. You can see a perfect zone here and here, the tail below but the close above. So if price were to rotate back toward this area over the next few days, it's still an area where OTF responsive bulls want to keep bid for a shot at bringing this thing even higher. So right now, very nice solid rejection of prices below 43s with a nice slingshot move higher. We'll see if this thing can continue to hold those 43s over the next few days. If we look at the intraday time frame right now, you can see the recovery here. Very, very significant. This was our first major target to reach in the room. It's the first thing we talked about right at RTH yesterday. 42.30 is the weekly 25% extension of the previous week's range. Price came into it and immediately started to hold and bounce back above it, and that sparked a move right back to 43.12, which is our key pivot. But once price pushed through 43.12 and then came and formed a higher low above it, that's all it needed here for this thing to continue higher and trap all of these late bears to the party. So 43 is still very important. You can see the LV in there. So if price, even if it were to come all the way back to 43s, you're still going to see willing OTF buyers down here that are going to continue to keep that thing bid. But short term, given the current trend, you want to step in and defend LVNs. This is a good LVN right here. 44 is a nice round number as well. 44.20 is also a key level. So if price comes into this zone, it could offer an opportunity to buy and look for an additional push higher. All right, let's take a look now at GC. Here's GC, kind of coiling up over the last few days, a trading range market on a higher time frame. We've obviously seen a major rejection of prices. First back to 1305 to 1310, which we were expecting, and then after the election, right back into the FOMC levels and value and rejected. This is after taking them offered back in late September. We've also pushed through new lows through the 1250 absorption point we were talking about before. 50 to 52 led to the bounce. We pushed through that area. Now we're holding on lows, and we have 2-day trading range that's forming here with all prices above the previous week's close being offered. So right now, OTF bears are defending prices above the previous week's close right now into 1233. So here's 1233 right here. That's the 50% extension of the election key range. The 100% extension is still below, and that's going to be at 1297.80. So what I mentioned before was this rejection, the way this was playing, all of that implied a move back to 1198 to 1200. And that's the 100% expansion, and 1200 has been our downside target this entire time. So that's the look right now, is that as long as bears keep 1233s rejected, you're looking for a push into this zone. Once price gets into 1200, between 1180 and 1200 is the rejection zone that we'll be looking for a potential return back toward 1320s. So right now we're keeping 1233 offered. Bears are looking to defend everything above the previous close, and if you can push through recent lows here, it could be very significant very quickly. All right, let's take a look now at the NQ. Here's the NQ. We continue to see the expanding pattern here develop. This is one we've been talking about for some time. We were able to identify, the rejection here. We didn't quite get to the bottom that I mentioned on the first pass before bouncing, but on the election day, event, we had that move right to the bottom there, and now we're back trading right in the middle. So at the moment, we're trading right in the middle chop, and that's basically 46.90 to about 48.40. That's that middle chop right in this zone, and that's where we're at. We're holding above the 46.90 and 47.30 FOMC levels. The other FOMC level is just above here at about 48.04. Those are 3 FOMC levels that have played out. The first one in July, this one in September, and this one here in November. And price is just chopping around those levels. So right now, we could see more chop here before we see some directional movement at the time. At the current time, any new lows is cause for a fade, any highs cause for a fade. But right now we're in the middle, makes things difficult, at least from a swing perspective. Now if we take a look at the intraday time frame, this one a little easier because we've just on the news, we got a whole bunch of economic data released at 7:30 a.m. Central here. You can see a nice coiled up range, and right now we've pushed above the 47.19, which is the midpoint of the election day range, pushed higher into 47.30, and we're coming back. So short term, breaking beyond 47.19 is bullish. That's the pivot to watch. If bulls can keep this pullback defense, we could see a push to higher highs into 47.42 and as high as 47.60. So holding this pivot would imply a move here and here. Failing to hold this pivot rotates prices right back to 46.90 and perhaps 46.80 as well. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.